Hello and good morning, feeders. Today is December 22nd, 2021, and my name is DJ. Joining me today, as always, the lovely Feeder Finance Patrick. Pat, if you'd like to say hello to our users at home.
Hi guys.
Hey, so, starting with the TLDR as usual, we've been going back and forth with PeckShield on our audit for the soon-to-launch lending product, while Pandit is working on the tools and features to support the platform. The price tool is still in development. Much progress has been made. Um, Still need to add DEX data after PCS was completed, but that should be coming soon. We've also been testing out the V2 Vault contracts on mainnet, and that as well is nearing completion. Hoping to see that launch soon as well. And the team overall is preparing for the lending launch, and we'll have a whole suite of marketing push to go with it. Influencers and a bunch of other good stuff. So a lot of good stuff coming. Um, Before we get to the meat and potatoes of our update, I'd like to first point out our community support page, or community support section of our weekly updates. We constantly update this with different places where our community members can help us extend our reach further. Some notable examples are Zapper and Zerion, 8board. A lot of these things have been here for a while, so if you guys haven't checked them out, please take the time to go ahead and give us a star or a thumbs up on some of these different platforms. But now, getting into the bulk of our update, first we have the lending platform. So this has probably been the most hyped thing for Feeder to come around in recent times. It's definitely a huge initiative to be undertaking, and I think it's something that is going to greatly enhance what we can offer our users here at Feeder Finance. So, Pat, can you talk a bit about what the audit process is like working with PeckShield?
Yeah, sure. They basically we sent them, what we've developed, and these are files and code pretty much.
Mm-hmm.
And they go through it and make sure that all the functions are safe, as in there aren't any rooms for any exploitations or mistakes. And these things are very detailed because when you're sometimes a miscalculation that's in the decimals, and I'm talking in general about DeFi contracts. um, these small these small mistakes could have devastating effects to users, especially things that we've seen, for instance, with Grim Finance
Mm-hmm.
just a couple of days ago. Um, and I'm not as deep into technicalities of things, but apparently, just adding a small thing, which in that case should not have been added because it's been a known exploit. But forking a standard contract in BFI, and it's pretty much a standard contract that most vaults use anyway. But they've been adding some small thing that end up leading to a 40 million or so loss in users' funds.
Oof.
Um, and they didn't use PeckShield, they didn't use Certic, and as far as I can tell, based on the Twitter community, the auditor isn't a reputable, or doesn't come highly recommended, I guess, from the people in the know. So our choice for PeckShield is always, they come at a premium, but it's worth it because they are very detailed in their process, and sometimes their feedback isn't really about mistakes. It's more like this could be written in a different way that makes it cleaner, for instance.
Right, a little more
It doesn't
efficient.
change exactly, and it doesn't even change the outcome. But that's the level of detail that they go into, and we're glad that we're working with them because um, it helps our contract work more efficiently and make sure and we're confident that the outcome is trustworthy, and we're confident that once it's all said and done, that things are safe. So, and that's what Jimmy's going back and forth with PeckShield about last couple of days, and they present some scenarios like, okay, if this happens, are you expecting this to go this way, for instance? So they're making sure that they're making sure that they understand what our intention is,
Right.
and vis-a-vis what the contract is doing, because um, to make sure that that's our intention. Because if it's not, then we could have written it a different way, and so on. Um, so it's been very active the last couple of days, since they're already, having completed their sort of review, and now are going through what they'd like us to fix, or what they'd like us to write differently, or what they need to clarify. So we're in the later stages of their process.
That's awesome. So Jimmy's been working directly with PeckShield on that. Meanwhile, Pandit's been finishing out some of the finer details for the lending platform, if I'm not mistaken.
Yeah. So when you think about the lending platform, it's
Mm-hmm.
one part contract, right? The thing that allows users to create these offers, setting the terms of the offer, both the lender side and the borrower side.
Mm-hmm.
But then there's also the front end side of things. For instance, if your loan is coming due and you're not too closely following all your, if you have 20, 30 loans, for instance, and uh, there isn't any notification about things coming due, or as a lender, collateral that you need to liquidate, or your funds that then you need to withdraw, and then create a new loan because that's expired and stuff like that. So Pandit's been working on the notification piece, which is also related to the social piece, because that's sort of the same thing on the back end. That
Right.
right, and but also things that we've worked on for social, which we knew all along that these sort of things is going to be useful for lending, going to be useful for other things on the platform, but it's also something we can use for social. So in general, we're sort of building all of these modules that we can then use for various different things on the platform, so we don't have to rebuild everything every time we create something new. um, so the review functions will also allow the review function that's already on the platform. The same exact sort of backend can be used for the lender and borrowers to sort of communicate, or allows for the offer created to come with descriptions or details. For instance, if you're collateralizing a token that's 5 days old, like nobody knows about this, right? So it's going to be hard to convince anybody to lend you money with that particular token as collateral. But if you can provide more context about it, and especially because we're not using oracles to price these tokens, and the borrower might need to give some more context as to what's the link to the pool coin to find out what the price is, or what the project does, and why they think like 30% LTV makes sense, and why they think 40% interest is worth, or is enough to compensate for the risk to the lenders and stuff like that. Because if it's only a loan offer with just terms, it could be relatively difficult for highly unknown tokens to actually get any liquidity from the lenders, because they would need to do the research, and sometimes people are just lazy. So
Very true. Very true.
that's that's what Pandit is working on, and as well as the other front end stuff to make sure it's the user interface is up to par with the other places on the platform.
Very nice. So, moving on to another big portion of our update, it looks like our very own Raphael has completed the PCS data aggregation. Wow, what an undertaking!
Yeah, it was. It took quite a while, because most of the time, not because we were working on it, but because we couldn't work on it. That's the irony of things. We couldn't work on it because of like the nodes being unstable and all of that. And so, every time there is an opening where things are stable, we get to work.
Hmm.
So that the PCS piece is done, and now we're moving on to the other dexes, which is a lot easier because there are actually third-party providers of data that provides us with these data that we have to custom build for PCS ourselves.
Hmm.
So that's what Raphael's doing. But he's actually also helping Jimmy build a lot of APIs to support the V2 contract, which we'll talk about. So his attention has been somewhat divided between a couple of things. Um, but once the data aggregation are done, then Raphael will then move on to basically linking it up or creating APIs to link up with the front end to then allow the portfolio to have historical data points to show and historical transactions for people that need to do taxes and all of that stuff. So that's coming.
Great work, Raphael. um, so you mentioned the V2 of our vault contracts are coming. Um, you want to talk a bit
Yeah.
about that? We're expanding the use of SFeed here.
Yes. So the core vault contract itself wouldn't change, and so we don't really need any audit to go with this, AK V2.
Okay.
It's just that we're adding things that are sort of on the outer layer things. For instance, uh, where the fees are going, how it gets divided, and adding some flexibility to that to allow, for instance, for our referral system to be expanded to vaults as well, not only farms, but also allowing for people with a certain amount of SV to get reduced fees, for instance. So, if you hold enough or a lot of SV, you might eliminate fees altogether. Um, but we'll create tiers that allow for SV holders to reduce their fees for these for the entry and exit fees. I think the profit sharing fees are somewhat more complicated. I don't think we can reduce that piece because of how it's pulled between all of the people in the vaults. You can't, right, because everybody's sort of paying the same thing. You can't split them up,
Right.
split these fees up. So that's not possible. But at least the entry and exit is possible, and that's what's getting added. Um, and that's actually really useful for people that are actually using Feeder eventually as we add the trading side of things with charts, because a lot of times I find myself using Feeder to trade, and then putting whatever position I have into the vault while I'm holding,
Mm.
because that way it also gets populated into the portfolio and everything else. But with the 0.1 fee in and out, every time I switch, I pay fees. But if I hold enough SV, then I don't have to worry about that at all because there's absolutely no fees to getting in and out of these vaults. So any core users and traders of that are using platform would super benefit from that, and it makes buying and holding feed something that has economic value to holders. Um, and aside from that, we're also thinking about a potential strategy shift in terms of how we're coming out with new vaults,
Mm.
um, because as you know, like we're trying to develop a lot of things on the platform at the same time.
Right.
Some of which are unique to us, and some of which are basically have been done by others.
Hmm.
And the vaults themselves is one of that piece that readily available everywhere. Um, so what we're trying to do is with the V2 as well to allow us to make it easier for us to aggregate vaults themselves. And so if there are other platforms that come out with vaults really quickly, um, and have a lot of coverage, far more coverage than we do, because that's perhaps the only thing that they do all day long. Then it would allow us to also aggregate them and reduce the time that we spend on reinventing the wheel to actually inventing wheels.
Mm-hmm.
Um, So that's what we're thinking about, and the V2 will allow for us to do that. And so if we need to speed up on launching vaults, we can basically just uh, aggregate other people's vaults and offering these products that are identical everywhere you go anyway. And even if we develop it ourselves, it wouldn't look any different.
Mm.
So that's where that's some of the high level things that we're working on in terms of our V2 vault contract.
Um, so for a quick weekly audio update exclusive, you and I had a little discussion before this call here, and you were talking about an update to the referral system. Would you want to add some color to that here for our users?
Yeah, sure. So that sort of goes back to what I was saying about trying to speed up or trying to reduce the amount of development time on things that have been done by others. Because since we launched, we implemented the referral system for the farm, and we have always known that we needed some front end to support that.
Mm-hmm.
And it's allowing users to see how much fees they or how much referral fees they have accumulated,
Mm-hmm.
perhaps which wallets have created these fees for them, and even for instance, having leadership boards that then allows us to create prizes and incentive for people that refer, because in the end I think still that's one of the most useful or the most efficient way that we have grown,
Mm-hmm.
which is basically just our community growing by itself from recommendations and referring. But we haven't been using, or we haven't been tapping into that resource as much as we'd like, just because we're doing all of these things all at the same time, and we don't have development resources to do this. And so that's with the V2 contract, like I said, um, not only will the farm have referrals, but the vaults as well. And so if you're referring people over and they start using vaults, you get, say half of the entry and exit fees from these vaults that they use
Mm-hmm.
forever. And so, if you're able to invite or able to refer enough whales, for instance, and assuming they don't hold enough SV to eliminate all fees, in that case, then, you're out of luck. Um, but if they're paying fees, then you'll be earning fees as well. So it's one way to not only help the platform but also earn some more feed, because these feed will then jump right into your wallet. And hopefully with more time now, we can sort of work on the front end to show you how much you've earned in feed, and possibly also give you prizes for pushing the effort.
How soon can feeders expect to see this new feature here? Is this going to be in tandem with the launch of lending and the influencer push?
um that's hard to say. So the feature itself, in terms of the vaults, this is pretty soon, because we're already testing it on mainnet, so it's almost there.
Mm-hmm.
We just need to fix some things. There's some gas fees issues at the moment, so we need to fix that, but it's almost done.
Mm-hmm.
um, in terms of the front end to support that, I think that's most likely within Q1 anyway.
Okay.
um, so I'm not sure. It also will depend on the portfolio, because that's sort of the blocker at the moment.
Right.
If we can get the portfolio out, say by January, then we can start to move on to this perhaps in February, and hopefully, and it shouldn't be something that takes too much time
Mm-hmm.
uh, if we're focused on it. So my guess would be at least by Q1. So that's the rough timeline I could provide.
Fair enough. More color than I was hoping to get, so I appreciate that. Thank you. Um,
Sure.
so the last thing we have here on our docket is just the lending launch. Do you want to tell a bit? Uh, would you like to tell our users back at home a bit about what we plan to do for the launch of our lending protocol? I know we've, you know, given a bit of color to it before, but just give a bit of light as to what we plan to do accompanying the launch of, all these amazing features.
Yeah, sure. So the way we're thinking about it is that, like, we've discussed before, the lending platform really needs for it to have both lenders and borrowers. And I know we have a lot of our community members who are, setting aside stables, preparing to lend out some money. But also a lot of guys with S-Feed or even Feed LPs that want to start to collateralize and borrow some stables to, do whatever they'd like with that. And so from our community standpoint, there are people ready to use it, but we need more, right? We need it to be, a rock star in the this new, because it's really novel in a sense that I don't think still at this point anybody has done this in the crypto space. And so our goal is to get influencers and other projects involved. And from the project standpoint, what I'm, or the team has been preparing is, some high level, quick brief of what the lending platform would look like, what it does, and how it benefits these projects, because ultimately it benefits all of the other projects that, Venus or Geist on FTM doesn't support with the lending pool, because you're just a small project or a medium-sized project with smaller lending pools and smaller liquidity pools. And so your users, if they need liquidity, they need to sell the token. Our argument is they don't, because if they need liquidity and they want to keep your tokens and want to hold the token, they can basically just collateralize here with us and start borrowing some stables to, unlock that liquidity. So that's the pitch basically, and we'll go out with that to a couple of projects that we know personally, and other projects where we're just basically cold calling people to tell them about this and see if they want to be involved. As for influencers, we also have, we know a couple of guys who are connected with influencers, and we need to also get them informed about what we're doing and the approach that, these guys would then go to the influencers to pitch the launch event to them. So that's what, we're sort of preparing and educating our networks to get the word out. And what we're thinking about is that the launch would be sort of this similar to a countdown we did for V2. And we will make sure that we have everything sort of prepared, from projects that are on board, influencers that are on board, before we make that, date announcement, because we want to make sure we are ready in terms of having people that will get the word out, both projects to their community and influencers to the wider community. So we're taking our time on that to make sure it goes well. But what it also gives us is more time to make sure the UIs and everything is ready. So we're not too much in this, this rush and pressure to get it done, which could affect quality. But it also helps with allowing us to have the platform ready enough to create content around it, to then, give that marketing outreach some more materials basically to go out with. So, please be patient with this, because I think it's in everybody's benefit for us to get this right, because it really needs this market outreach for it to be a hit. But we also believe that it will be a hit because of how useful it is, and I think everybody agrees it's going to be really fun to use and really useful for projects and for DeFi investors as a whole.
So is there any hard deadline? I'm going to take a stab here and assume no.
Hard deadline? Well, it definitely not by this year, obviously, because the audit's still not done, and we still need to go out. My hope is, by January, for everything to be ready, as in for things, for the launch event itself. As to when the launch event announcement will happen, that's TBD. I'm not sure how the holidays will go, because we'll still be working, but I'm not sure whether others will be. And so we'll need to see how much feedback we can get during the holidays, because if it's super quiet, then we'll start to find out what the feedbacks are and what we need to do to get this going, probably first week January when everything comes back online. And so, yeah, well, it's hard to say at the moment, but I think my hope is the launch by January and the announcements before that, obviously.
That is incredibly exciting news. Um, but I believe that brings us to the end of our weekly update. Um, Before we go, Pat, what are your predictions for the market going into 2022? There's been a lot of speculation as to, are we in a bull market? Are we in a bear market? And, just overall, we're at the end of the year here. It's been what? We've been at this for 6, 7, 8 months now? Oh my God. Wow. Yeah, it's been an interesting year. So, what do you think we have in store for us in the coming year?
I'm always relatively optimistic as a whole, especially for the markets. But I also use evidence to support my thesis, and
Sure.
um, I still think based on what I see in terms of economic data, based on what I see from the charts as well. What we've seen over the past 2 months looks more like a correction within the bull market. Every single major tokens that I follow, and these are cryptocurrencies, not project DeFi or GameFi, but major cryptocurrencies that are supporting blockchains, they're all still above their 200-day moving average, which
Mm-hmm.
to me speaks bull market. And we haven't really seen like a blow off top uh, like we've seen, say, in 2017, or even in April and May when we also saw a similar correction. At that time, it went below 200 moving average, and I was somewhat concerned. This time around, I'm not concerned at all.
Mm-hmm.
Having said that, what I think 2022 will be is a much more volatile sort of trading environment than we've seen in 2021.
Right.
That's also like in my mind because the equity market um, we've had a good year, not only in crypto but for the market in general coming out of COVID,
Mm.
um, and that's out of the way. And the question is, how will companies and their super high valuations maintain or even grow higher?
Right.
And we've seen evidence of weakness, especially in U.S. equity markets, quite a lot. And the only thing that kept the market higher are technology companies and those FANG stocks. And so my thesis is next year is going to be choppy, going to be more difficult to trade.
Yep.
And whether or not we see the end of this bull market for cryptos remains to be seen. I hope not, but uh, we could see a major correction if the stock market starts to see some major weaknesses. Um, any thoughts on your end?
Yeah. No. I'm right there with you. I think it's definitely going to be an incredibly volatile market as we've entered what I perceive to be as a new paradigm. Previously before, I'd say like last year, around this time, we had just seen, Bitcoin start to really pump up again after, and retesting and pushing all-time highs. And that was right about this time last year. As far as where we'll be next year in this exact time, I can't say for certain. All I know is that this next year is going to be incredibly volatile as we play around in this new paradigm. There's going to be old wave investors that are leaving their positions, entering into new ones, et cetera, et cetera. And I think that's going to cause a lot of commotion, especially as the broader market, especially the macros, really are tested with uh, Omicron. I'm not much to be a doomer or anyone to say, that, oh my God, the end is nigh or anything like that. But I think it's healthy to hold skepticism to the broader economy in relation to crypto, because crypto is not a hedge. Despite what everyone says and despite what people try and play it off as, crypto is an incredibly high risk asset with
Yep.
incredibly volatile swings, and I don't think it's safe to say that you can just hedge everything into crypto and be fine, right? Um,
Yeah.
Obviously, there's going to be risk takers, and if you're out there like me and everything is in crypto, best of luck to you. Um, but
Yeah.
I just think, yeah, this coming year is going to be incredibly interesting, and I think we hopefully will have that blow off top My guess is around April to June, somewhere in that range. So quarter two, essentially. Um, but I'd like to preface all of this by saying, or rather, I'd like to give the afterthought here that nothing that Pat and I said is financial advice. Please don't hold us to it. This is just our opinions and a way to fill the time. So,
Yeah.
uh,
Uh, before we go, I some final thoughts really, because I
sure.
think a lot of people, and it goes back to your point about being all in crypto, right? I think a lot of people struggle about being all in crypto and not being able to uh, diversify or de-risk because they're all in crypto, and when crypto goes down, everything goes down because you're in this one asset class. But really, when in a traditional sense, when you're de-risking, you're going to cash or you're going to treasuries and all of that, and you're earning in most cases less than 1%. If you're going to 10-year, you're earning 1%. In crypto, is really amazing because when you go to cash, you get 20%, right?
Mm-hmm.
So you don't need to be 100% in ETH or BNB or in feed or in any token, because even when you're de-risking, going into stables in crypto makes 20%. So if
Right.
you're on, if you start to think like the market is, if you're not no longer confident about the market, simply just de-risk and be 20-30% in crypto and the rest go into stables and wait for it to to settle. And when you're confident again, go back in, because you're not losing anything. You're making 20%, and that's the expected returns for equity market, or the actual return above inflation for the stock market over the past 10 years has been 14%. You're making more than what has been an amazing 10-year for the stock market, and you'll be making 14% real returns. In crypto, you'll make 20 nominal returns. So I guess uh, going forward, real return, say, well, I still think way better than stock markets. So yeah, keep that in mind.
Just remember, guys, a savings account at most will probably gross you 0.5%, maybe as high as 3%. That's usually for like the first $1,000 in traditional finance, right? A
Yeah.
mutual fund will probably get you 6%, and a Roth IRA, the bread and butter, the end all be all of traditional finance products, that's about 12%. So um, de-risk yourself, guys, if you're feeling scared about the volatility that's coming. And remember to park your stables here at Feeder. We have some incredible vault options here for a variety of different stable options. So, whatever you feel safe with, we can hold on to you and help you, you know, make some gains even while the market's all red. So, I believe that's all we have for you this week, folks. Thank you for tuning in if you've made it this far. Be sure to like, subscribe, and all that other fun jazz. And Pat and I will be back. Actually, when will we be back? Next Sunday? This coming Sunday, 26th, or
Uh, we'll let you guys know. I'll let you know. We'll see.
all right. So, to be TBD or TBA. We'll see you guys soon. Thanks for tuning in. We'll catch you later. Bye, guys.